Hello traders, welcome to this live webinar. My name is Chris Swarcik from Elite Currency. I'm going to be talking about waves and how to understand them better, how to use them, why they're useful in looking at charts and trading charts. Also, we'll explain how you can use moving averages, fibs, and also fractals to simplify your wave decisions, to simplify your wave analysis, and make it more concrete and easier to trade. And yeah, moving averages is a key tool for me and my SWAT course. SWAT stands for Simple Wave Analysis and Trading, and explains how, yeah, basically you can make a shortcut for yourself because using Elliott wave theory is great, but has its ups and downs, has its complications and complexities that might make it a bit tricky for unexperienced traders. And the road map or the learning path can be quite lengthy for those inexperienced traders with waves. Specifically translating your wave analysis into trading ideas has its difficulties and complexities, and therefore my course tries to simplify that and make everything more actionable and more concrete and simpler to implement. So I'm a big fan of Elliott wave theory. I'm a big fan of wave analysis, but I'm also honest in telling traders it's not the simplest thing to master. It takes time, it takes experience, and it takes years to build that experience. But on the flip side, there are shortcuts. There are easier ways to implement waves, and one of those great tools is moving averages, and my course explains in exact detail how you can use moving averages, fibs, and fractals to simplify that. So yeah, this is going to be one of the two webinars we have per month, looking at waves together with you. I'm excited. We'll have one again 2 weeks from now. We're going to have that regularly every month, these webinars. So looking forward to doing that. All right. Now it's time to take a look at some of these charts and see how things are going with regard to waves. I wanted to have a more practical webinar today with regard to understanding the markets. So let's just look at live charts today. And we might do it a little bit different next time. And look more theory or mixture. All right, folks. So let's start with the euro dollar. Hello, David. Good to see you. Everything is pretty okay with me. How about you? I hope everything is fine. All right. So, moving averages. Well, I think that they provide a lot of value in understanding the wave patterns based on how price is in its relationship to, for instance, the 21 EMA zone. Let's take away the long-term moving averages for a second. Okay, and let's just take a look at the 21 EMA zone and crunch up the chart like this. Go back a little bit. So you can see that here, for instance, very nice downtrend, here very nice uptrend. The 21 EMA is often then kind of a reset moment, a pullback spot within a trend, and a retracement level where the trend could continue, or if price re-breaks in the opposite direction, a spot where the trend changes. As you can see here, we had break below the 20 MA, pull back into the 20 MA, continuation, but then we had a re-break above the 20 MA, push above it, pull back into 20 MA, and then a bounce, as you can see, for one more push higher. All right. Now, of course, sometimes you have breaks back and forth. In this case, we have a range going on in this spot. And you can see that price is building a range here and then breaks ultimately to the downside. So 21 EMA is a great level for short-term trend, but also as price stays away from the 20 EMA, it is a great tool for momentum as well. You see these diamonds, for instance, from the SWAT template, they indicate that price has stayed 10 to 15 candles away from the 20 EMA. 10 to 15 candles away from the 20 EMA. Here too, 10 to 15 candles away from the 20 EMA. So yeah, there's a lot of value in the 20 EMA zone. Just as a spot, first of all, the short-term trend is priced above it or below it. The break or bounce in the zone, here's a break, here's a bounce. That gives a lot of info. And price versus the 20 EMA zone. As you can see, the angle here, very steep, but also how many candles are staying below the 20 EMA zone. And that indicates a lot of momentum. So when price goes back to it, there's a high chance of price using that 20 EMA zone for a continuation. So you can see using these moving averages gives a lot of info about the price swing, and therefore also a lot of info about the potential wave pattern that it currently has. And it really doesn't matter what the wave pattern is exactly, actually, in some cases or most cases. If you use the 20 EMA zone, you understand kind of the structure of the chart, and hence it really doesn't matter what the exact wave count is. That's the beauty in a way of using that. Okay, so here you can see price moving back into the 20 EMA zone, bounce, but no trend continuation, a higher low, and then a re-break above the 20 EMA, indicating probably a wave C in this case. Wave A, B, C zigzag. So the failure of the low plus the break above the 20 EMA, indicating a wave C most likely in this case. Here, very strong. You see the pink dots, pink diamonds, indicating price is moving away from the 20 EMA. So this strength of a push, also confirmed by the AO, awesome oscillator, and the ECS MACD, very strong reading as well. And then the shallow pullback that just barely hits the 20 EMA zone and stays there and sticks to it, doesn't break above it. Very typical for wave 4, and then the re-break below it, below these fractals, and below the 20 EMA, a continuation of the wave 5. So these are very practical examples of the past on the daily chart, and that's the same for all time frames really, of reading waves in relationship to the 21 EMA zone. All right, so this is all very strong wave 3, 4, 5, 3, and finishing another 3, 4, and moving down lower basically. All right, now in some cases, price is not going to be showing as, this was a beautiful downtrend, of course. Here you see quite a good example of a range period, basically where price was going quite flat, relatively speaking. That said, still, pretty good break pullback continuation, counter trend probably, then a break pullback continuation here with the trend. Again, a counter trend momentum back to the previous bottom, and price versus the 20 EMA zone, very key in the next swing, right? So just because we get a break doesn't mean we always get a bigger retracement. Here we had a break below the 20 EMA zone, but it was turned out just to be a pullback actually within that larger push up. All right, that's why fractals are important as well. Fractals at the 21 EMA zone, as you can see, this one didn't get broken. This one did, and here we got a pretty strong push below the 20 EMA zone. Here we got break, pullback continuation, but it didn't go too far. We got a deeper pullback. The next break went further. Here again, a break below the 20 EMA. Retesting the previous bottom, we got a double bottom instead. Next break above the 20 EMA. Got a double top. Retracement and continuation. So not all breaks of the 21 EMA are great trades, obviously. But generally speaking, it gives a lot of good info about the next swing. Specifically, if we have bigger context with the long-term moving averages as well. Yeah, it gives a lot of info about the current swing, about the next swing, and the direction, the strength of that direction, just by using the 20-minute EMA zone. All right, so let's go to current day price action on the daily chart. You can see that the 20-minute EMA zone has held as a bullish angle and bullish support for quite a while, as you can see, since mid-May. So we're talking about 4 months already. The angle of the 20-minute has been up, and price has been above it, and with some strong momentum pushers as indicated by these green diamonds. Price has been away from the 20-minute fractals, staying in the 20-minute EMA zone. This has been very bullish, as you can see on the daily chart. And recently, actually, we're seeing 2 wicks at the bottom support at the 20-minute zone again. Before that, we had a range, in fact, here. Some momentum up, range, and then we got the break above the 20-minute zone that started in mid-May, that started this uptrend. Before that, we had quite some volatility, downtrend, pullback, continuation with the lower low, the momentum up. All in all, probably this ended a wave 5 of 3. This was a very strong ABC within wave 4, and this was a wave 5. And now we're probably in an uptrend of some sort. Some 5-wave pattern. Looks like a 5-wave pattern for the moment. And this could be still part of a wave 4. For instance, some triangle pattern might still emerge here, and we get one more push up for wave 5. Wave 5 pattern could also be finished. In that case, it really depends on how price responds to, for instance, this fib, and whether price breaks through these shallow fibs, whether it's a wave 4 or of an uptrend, or whether the 5 wave is completed and we're getting a bigger retracement to deeper fibs like that. Okay, so it's going to be interesting to see here how price responds to the 20-minute zone, because if it, what I suspect is that it will break a little bit below it eventually. There will be a bounce, and I suspect then if it re-breaks below the 20-minute zone for the second time, then there could be a bigger retracement. Whereas if it breaks above the 20-minute zone like this, so if it uses the 20-minute zone as a bouncing spot, then I suspect that the uptrend will continue. Whereas if it re-breaks the second time below the 20-minute zone, there might be a bigger pullback in fact. So this is a key thing. The 20-minute zone will be a key indicator whether we get a bigger retracement or not. But certainly the first break, I would not trade the first break to the downside here because of the hefty uptrend that we had, and therefore likely the price will still be using some type of support level for one more bounce up. And that's why, if we use chart patterns, for instance, there's likely, if there is a reversal, there's likely to be this left shoulder ahead and a right shoulder before we get a bigger reversal. That's why that second break below the 20-minute is so important, because of that strong momentum we had in this uptrend. All right, so something like this, up, down, and up, or up, down, sideways down, for instance, will be key to understand whether this is the end of wave 5 already, or if we get one more wave 5, in fact. Do you see that? So this is really very, useful info. That 20-minute EMA zone, I think, gives a lot of value in understanding the context of the chart. Just one simple tool, in a way, would give so much information. Now, I have a lot more information here, but if you just only have that, I think it really is very valuable. Now, I do have other indicators on this chart, other moving averages, But that's it's I like that info because it gives me all kind of different information that I would like to know in a quick way, because I don't have to count. These diamonds just indicate how many candles are away from the 20 EMA zone, so that saves me time to count candles. I like the long-term moving averages because it gives me context and structure. I like the oscillators because it helps me read the wave counts as well. I won't dive in all of these factors here. I want to keep things, to the point in the webinar. I don't want to diverge and start talking about too many things. It might get confusing. But to me, all of these give aspects of a picture, of the bigger picture, and help me get that context that I tried to get, and therefore help me assess the probabilities of a chart and the time frame and pair. So when I do my wave analysis, when I do my euro dollar analysis, video analysis, right, that I have twice a week, I use this template. When I do my wave analysis in the morning, today I did NASDAQ, but it could be gold, it could be Dow Jones, it could be your dollar, it could be pound to odd, right? I also use this approach to understand the chart. I also have other indicators like this to show where it could be trades and setups and stuff like that. But I'm not going to dive in all that. I'm going to stick maybe for moving averages for the moment. By the way, if you have any questions, of course, feel free to reach out and let me know. So in this case, let's take a look. Yeah, you can see that that the break through the 144 EMA, very important, the 610 EMA as well. Let's take a look at the 4-hour chart. All right. So here we saw a break above the 610 EMA, bounce into 144 EMA. This was very critical because until here we had basically price testing this long-term moving average zone, but then bouncing all the time, bouncing. Here was the critical break where we had basically price pushing above the long-term moving averages, a pullback, but then a bounce at the 144 EMA, so there was not a re-break below it. And then the next break above the 21 EMA was critical for that continuation. So we had break above the long-term moving averages, but then a pullback that bounced at them, and then a re-break above the 20 EMA, and the price was neatly riding above that. So when you have good momentum like that, lower time frames, potential for trade scale-ins as well. We get 1-2 tests of the 20 EMA zone, probably a wave 1, 2, 1, 2, 3, 4, 5. So when price is testing the 20 EMA zone, it could easily be a wave 2 or 4. Whereas when price is moving away from the 20 EMA zone, it could be a wave 1. So this is, you see price is moving away from the 20 EMA zone, that's a wave 1. Pullback, wave 2. This long push up, a wave 3 as price is moving away from the 20 EMA, and a pullback into the 20 EMA and a bounce, wave 4. Then a short move away from the 20 EMA, typical for wave 5. Rebreak below the 20 EMA, wave A. A push against the 21 EMA here that fails to really pull away from it at all, wave B. Second rebreak below the 20 EMA, typical wave C, as you can see. Now, what this 5 wave up and ABC down, what happens after that depends on the context. What does the larger context say, right? Well, in the meantime, we see that moving averages are fully aligned to the upside, or we see price respecting the 144 EMA. So and we have to look more to the past as well to get a bit better idea. And we can see that there was an upside, a correction, and an upside. So that is either in ABC, and we're in a downtrend, or it is some type of continuation of 1, 2, 3, and an uptrend is possible. So all of that depends on how price responds to the long-term moving average zone, the 144 versus 233 EMA, and whether price uses that as a bouncing spot or a break spot. If it were break through that zone, this is probably an ABC. Completed, then we're looking at a downtrend. If price respects that zone, we could easily be looking at a wave 1 here, wave 2 with an ABC and wave 2 here, as you can see, A, B, C. And then we're looking at a wave 1, 2, and up for 3, and this is a wave 4. So we could easily put a fib from here to here. And if it also respects specifically the shallow fibs, like a 38, maybe even a 50, or the 23.6 fib, of course that's looking more like a wave 4 in that case. So that's what we got, price respecting, bouncing very clearly at the 38, ABC as we said, strong push up, and then the correction respecting again the 144 EMA. So that looks like a wave 1, 2. And then we get a rebreak above the 20 EMA here, and here, and here. The third break doing the best because the first two breaks finding some difficulties, but yeah, the first break specifically here, making quite some downside. The second break and pullback already respecting the 20 EMA zone a little bit more. The third one even more, and the fourth one even more as the 20 EMA zone starts to get a more and more bullish angle. In fact, in price respecting the 20 EMA zone more and more at higher levels. So basically, price is starting to pick up in its momentum to the upside, as you can see, slowly but surely. In this case, it was quite a slow start, but eventually it did pick up and started to move up with some speed, as you can see, to the upside. What I also like is not only how price responds to the 20 EMA here, in this case, beautiful 5-wave up, beautiful ABC pattern here, but also how it respects the 144 EMA. Very, very useful moving average for long-term perspectives. Beautiful spot for bounce and breaks. Really gives a lot of perspective about the wave patterns as well. Plus, what I love is the fractals at the 21 EMA zone. So a fractal that is away from the 20 EMA zone is very valuable in relationship to understanding the breakout. Basically, if price is pushing above a fractal that is away from the 20 EMA zone, that breakout is typically very valuable. Whereas these fractals are glued towards the 21 EMA zone, as you can see, and here we have one fractal that's loose from the 20 EMA, but the 144 EMA is very close. So this is a very important break of this fractal here. Here we have another fractal break. Here too, these two. Those are all very important breaks for the trend continuation. But what also the fractal above the 20 EMA indicates is that the short-term trend is up as well. So not only are they important for breakouts, but also for when is that trend, the continuation of the trend confirmed. And in my view, the strong momentum up here, the bounce at the 38 and 144 EMA, this was the moment where I think an uptrend was very likely. Falling wedge here as well. ABC completed. Divergence between these bottoms. Long-term moving averages are aligned. Good momentum. Fractals above the 21 EMA. Pullback again, triple bottom at the 144 EMA, bouncing and using that as support. And then we got this fractals above the 20 EMA. So that indicates that here too. So double confirmation of the trend back up again. And that's what happened after that. So a lot of good stuff here confirming that upside at that point. Of course, 4-hour chart, you got to be patient. These things take their time sometimes, as you can see. But eventually, we get a push up with momentum. Look at the green diamond. A shallow wave 4 that respects the 20 EMA, and a beautiful continuation here. Some type of wave 3 as well. Then wave 4, ABC pattern for wave 4, and then a continuation up again, probably for wave 5. But we see actually here maybe some type of 3-wave pattern. So it could be a complex correction, ABC, ABC, 1, 2, 3, 4, 5, and then one more push up for the uptrend. That's where actually we are right now. So another useful bit of information, of course, is the higher low here. And specifically here is also time pattern. 5 to 7 candles not breaking this low, so more and more likely that this low is confirmed. So at this moment, price is respecting the 144 EMA, but there's strong momentum here. There is, in my view, some type of divergence. Price has hit 120, top of the channel. And I think that there could be a bigger retracement due to the momentum that we see here. I think that's likely. Now that said, yeah, price respects the 20-way zone pretty nicely at this moment. 1, 2, 3, 4, 5. But I'm still leaning towards some bounce at this point to the upside. As I explained in my video today, I think that it might make a dash here, but good chance of a bounce like that, maybe some ABC pattern up in here, or maybe even as far as the head and shoulders level. Somewhere in here. And then the downside. Now, if it starts breaking through this trend line, however, there might be an immediate push lower, but I still suspect some type of bounce in this zone for retracement at this point, at least, due to the daily 21 EMA zone in this area. Okay. I think there's a fair chance that 144 EMA will hold, but you never know. This is strong bearish momentum, so it could break as well. If it does move up, then I suspect that this zone will be resistance for a move lower again. Okay, so at this point you can see that here the 20-way becomes a little bit choppier. That's because of the ABC pattern, then the ABC pattern, and then a 5-wave, and then a 5th wave up. But generally speaking, the upside, the price breaking above the 20-way zone here, here, and here, still giving the most potential for earning, for good trades. Whereas the break below the 20-way giving really quite small trades in most cases because it's still counter trend. Yeah, so I think that you can see with this example the beauty of combining wave patterns, chart patterns, time patterns, fractals, fibs, long-term moving averages, short-term moving averages, even the oscillator, and how that gives perspective to these scenarios here in recent past. And yeah, what kind of information we can get from that. And specifically here, you can see when you get momentum confirmed and a break above this fractal, we're also breaking above the top, as you can see. Move right up to the minus 272 target, boom, right up to the minus 61.8 target. And yeah, that's one tool besides the fibs for targets. It's also very practical as the whiz, another basically practical tool for understanding how far the trend has gone. As you can see here, the whiz tool indicates Fibonacci sequence levels, by the way, just in case you didn't know. You can see here break above the 7th level, right up to the 8th, then right up to Wiz 9 level. Beautiful how that Wiz indicates that here too. Break above level 5, up to 6, up to 7, up to 8. Not fully up to 9, but indicates the beautiful space with the trend. So yeah, some might maybe see a lot of tools on my chart, and I understand that, but they all have a goal. They all try to give a piece of, try to explain the piece of the puzzle in a simple way, quick way, and with quick understanding. Really, that's really to simplify it in a way. I know it sounds funny, but to get context in a quick way and understand the bigger picture, and whether there's some interesting trades and what to when would be a interesting trade or not. So I think that the 20 EMA zone and the 144 EMA give a lot of practical help with determining that context. Really very wonderful tools in my view, for understanding that picture, the strength, the trend, the direction. Just it's difficult for me to imagine understanding the chart without it, really, to be honest. Let's take a look at the blank chart for the fun of it. And I just don't see how, you can. I mean, nothing wrong with it. I'm sure that traders can be very successful like this as well. But I feel like I don't have context. I feel like that it's difficult to know really what's going on with a blank chart like that. Now, a certain, I mean, if I'm not saying it's impossible, I'm sure plenty of strategies that can successfully rely on a blank chart like that, specifically with candlestick patterns. I'm not judging anyone, but for me to get the context that I want, 21 EMA, 144 EMA are certainly a very important part of that. And frankly, all the tools that I like to use help me tie together all these pieces of the puzzle, to give me the context I want. So 21 EMA, 144 are very important, but other tools as well, fractals, Wiz, etc. So today I wanted to focus on the 21 EMA specifically, but I also 144 EMA, how important that is as well. Let's take a look here. As you can see how important that is for understanding here bounce and here the break, pullback, and continuation on the euro dollar. Now I only looked at the euro dollar. We can take a look quickly at other type of instruments. Just great, David. Just had time to read your message. I'm not sure if you're here still, but great stuff. Happy to hear about that new job. That's excellent. And happy that you got some time again for trading. Great stuff. Happy to hear that. For instance, here, daily chart, you can see. Oh, hang on, folks. Look at that. Bounce at the 144, 233 EMA zone once, 2, 3, 4, 5, 6 times. Then a lift off. Then we got the break below that zone, massive correction, correction up to that zone, ABC. Then a re-break above it, pull back and bounce at the 144 EMA. Beautiful how that 144 EMA works, and the 20 EMA zone too, by the way, has been bullish ever since this beginning April. And not only on the Dow Jones, but specifically the Nasdaq even more so. Here too, 20 EMA riding nicely. Here, 2018, we had also a pretty big pullback with price breaking below the 144.2233, pull back into it, and then a bounce for continuation. Here we had a pullback into it, bounce again, and then a sustained push above the 20 MA for an uptrend continuation. Look at this sustained move above the 20 MA. Here too, we had some pullbacks into the 20 MA zone, but ultimately, beautiful continuation. Beautiful uptrend, ABC pattern back into the long-term moving average, bounce, re-break above the 20 MA, uptrend continuation, ABC back into the long-term moving average, bounce, break above the 20 MA, pull back, re-break, beautiful uptrend, ABC, re-break above the 20 MA, pullbacks to the 144 MA, bounces, re-breaks above the 20 MA, trend continuation. So definitely not only for the Forex market, you can see how useful I think it is to get context of these charts when using these sets of moving averages. Now, we're skipping a lot of price action. We're just looking at the very, very long-term picture here. But just imagine that you're looking at the chart and you see a doji here at the 144 MA. ABC down. You see 1, 2, 3. You see a doji. That could be a great moment for a buy maybe at that point. Or the next bullish candle, for instance, could still be a great moment. Or to break above the 20 MA zone. Right? So we're seeing a big picture, that's fine. But there's a lot of context that could be gained from these moving averages. And I explained all of that in the course. And if you are curious about the SWAT course, you can get it for free, by the way. Before I forget to mention that, let me tell you that right now, just by verifying an account with a partner broker like HYCM or Key2 Markets, for instance, and start trading, and you get access to my SWAT course, 20 plus hours, 70 plus videos, the indicators, the ebook, 600-page ebook. Don't worry about the size of the ebook. About half of it is pictures, so don't worry. And I think a lot of education that you can find in that. So, and it's for free. So if you do that through them, if you don't want to get it for free because you already have an account and you don't want to start another account, of course you can also join the SWAT course as a paying member, of course, as well. So just a lot of info. Now, of course, if prices stayed away from the 20 MA zone here and starts to show smaller candles and hesitation, there's always the risk that it could retrace back to the 21 or the 144 MA zone, like it did here, for instance, right? Or when here, for instance, this price is bouncing at the 144 and the 21, there's a good chance that if the momentum is strong to the downside, that the 21 EMA zone could act as resistance, like it did here and here, before finally price breaks to the upside. Or if price is unable to push away from the 20 EMA zone, you can see that this is building it's an uptrend, but it's really not able to continue with that uptrend, right? So you can see it's sticking to the 20 EMA zone, so it's showing some kind of consolidation zone. And that could indicate some type of reversal pattern, that the trend is losing its steam, and that's what happened. Look, boom, big correction after that. So a lot of things you can read with these moving averages. I hope that that this webinar gives you some context about how you can use that. This is free info. Feel free to use these moving averages yourself. It's not a secret. And if you think that it's useful, then I hope to see you as a member. All right, and otherwise, we show good trading. Hi, Ilya. I'm just about to finish, actually. Sorry about that. Bit bad timing, but it will be available as a recording on YouTube and on our YouTube channel, or if you can already watch the recording here, actually, on this webinar software. But thanks for dropping in, David. Thanks to and everyone else. We'll be back 2 weeks from now with the new wave trading webinar. Tomorrow we'll have an EA webinar, so if you're looking forward to if you want to check out a different type of webinar. We got one tomorrow as well, by the way, about EAs. And of course, don't forget, Nenet's Tarantula's webinars on Monday with his Monday recap trading setup ideas. So plenty of choice, I guess. Okay. In any case, see you all very soon then, and good trading. Cheers. Bye-bye.